Hello and welcome back to the channel where we break down the mechanics of the market. Today, we're diving deep into a stock that's caught our attention on the hard-to-borrow screener Cathay Precision Inc., ticker symbol VTAK. We'll explore why this medical device company is becoming incredibly expensive for short sellers and what that could mean. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Let's start with an overview of VTAK. Cathay Precision Inc. operates in the healthcare and medical devices sector. They design, manufacture, and sell crucial medical technologies for cardiac electrophysiology, both in the United States and Europe. Their flagship product is the View Interventricular Onset System, an innovative non-invasive imaging system offering 3D cardiac mapping to assist with complex procedures. Currently, VTAK has a market capitalization of just $2.01 million. Looking at recent price action, VTAK has seen some significant drops today. It's down 10.16%. Over the last 5 days, it's fallen 11.54%, and over the last 30 days, it's shed 43.63% of its value. Volume data is also interesting. Today's volume is 1,401,427 shares, which is significantly lower than its 30-day average volume of 16,476,190 shares, giving us a relative volume of just 0.1 x. What is cost to borrow and why it matters? Animation graph showing rising CTB. At the heart of our discussion today is the concept of cost to borrow, or CTB. This is an annualized fee that short sellers must pay to borrow shares of a stock before they sell them in the market. Think of it as interest on a loan, but for stocks. When a stock becomes hard to borrow, it means there's a limited supply of shares available to short, and high demand from short sellers. This scarcity drives up the CTB fee. These fees can easily exceed 100% annually if a stock costs 1% per day to borrow. That quickly adds up to over 365% on an annualized basis. A high and rising CTB signals increasing pressure on short sellers, making their positions progressively more expensive to maintain. Why the stock is hard to borrow right now? Highlight CTB numbers on screen. VTAK has appeared on our hard-to-borrow screener for some truly remarkable reasons. The current cost to borrow fee for Cathay Precision Inc. stands at an astonishing 740.3% annualized. And it's not just high, the CTB momentum has surged by an additional 180 percentage points over just the last 5 trading days. This indicates a rapidly intensifying situation for anyone trying to short VTAK. Perhaps the most striking detail is the extreme scarcity of shares. There are currently only 300 shares available to borrow. With an estimated float of 2.6 million shares, this makes VTAK incredibly illiquid on the short side. Our internal composite squeeze score, which combines factors like CTB, borrower supply, and technicals, currently gives VTAK a 49.2, not the highest, but certainly indicating developing conditions. While a high cost to borrow puts immense pressure on short sellers, it's crucial to remember it does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the price will continue to fall, and they are willing to pay a premium to maintain their positions. Squeeze mechanics explained. Animation illustrates short squeeze process. So, what is a short squeeze? It's a scenario where a stock's price surges upwards, forcing short sellers who bet against the stock to buy back shares to cover their positions. This forced buying creates even more upward pressure on the price, trapping more short sellers in a vicious cycle. For VTAK, with a 740.3% CTB and a mere 300 shares available to borrow against a 2.6 million share float, even a small positive catalyst or sustained buying pressure could trigger this feedback loop. Short sellers would face incredible financial pressure to close out their positions to avoid those massive daily borrowing fees, potentially creating a rapid, sharp move upwards. Dilution risk check. Text overlay, no dilution risk for VTAK. An essential part of analyzing any potential squeeze candidate is assessing dilution risk. Dilution occurs when a company issues new shares, which increases the total share count and can dilute the value of existing shares. Even with a high cost to borrow, new share issuances can flood the market with supply, effectively negating any upward pressure from short covering. For VTAK, we've conducted our checks. We found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. Furthermore, there has been no recent reverse split found for VTAK in our look-back window. This is a positive sign, as it removes one significant headwind that often plagues high CTB stocks. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show VTAK price chart with key levels. So, if you're watching VTAK, what should you keep an eye on? First, continue monitoring that cost to borrow. Will it climb even higher? Second, observe the borrowable shares. Will that tiny supply of 300 shares dwindle to zero? Third, watch for a significant increase in trading volume, especially above its average, which could signal new interest or short covering. A turnaround in the recent downward price trend, perhaps on a strong green day, would also be a key indicator. Given VTAK's small 2.6 million share float, any substantial buying pressure could have an outsized impact on the share price. Lastly, keep an eye out for any company news or positive developments from Catheter Precision, Inc. that could act as a catalyst. Final visual, VTAK ticker and channel logo. To sum it up, Catheter Precision, Inc. VTAK presents a compelling case study on the hard-to-borrow screener with its astronomical 740.3% CTB and near zero shares available to borrow. While the recent price action has been negative, the underlying short mechanics are tightening significantly and without immediate dilution risk. Remember, the market is unpredictable, and high CTB does not guarantee a squeeze. But understanding these factors can help you make more informed decisions. If you found this breakdown helpful, please hit that like button, subscribe for more unique market insights, and let us know your thoughts on VTAK in the comments below. We love hearing from you.